Hello, property navigators. Every federal election sparks debate. Will property prices stall, or could a new government send values soaring?
The 2025 federal election.
Peter Dutton will be hoping tonight's first leaders debate.
The world has thrown a lot of challenges at Australia in the last few years.
A tough 3 years, in fact.
Today we'll explore historical data to see what actually happens to our property market when Aussies hit the polls. We'll be reviewing house prices, buyer-seller activity, auction clearance rates, and market sentiment. Let's go. Since 1980, Australian capital city house prices have risen faster under some governments than others. But analysts note this gap isn't simply because one party is better for property. Domain researched this topic and after crunching the numbers found no statistically significant difference in the housing market growth based on which party won. The difference largely reflects timing and external factors. For example, an exceptional price surge during certain terms coincided with record low interest rates. When adjusted for such one-off booms, neither major party had a decisive edge in overall property price performance. Many election years themselves saw the property market simply continue its prevailing trajectory. For example, in 2013, the election coincided with surging prices in Sydney and Melbourne, not because of the vote, but thanks to interest rate cuts that had begun stimulating buyer demand. Conversely, the 2007 election was followed by the global financial crisis, briefly softening prices despite a new government coming in. In other words, macroeconomic forces trump the election timing, with the key takeaway being that property values have trended upward in the long run regardless of any election outcomes, barring short-term cycle fluctuations. That said, the lead up to an election isn't completely irrelevant, which brings us to discuss the next topic, election campaign effects. Campaign periods do introduce uncertainty, and in real estate, uncertainty often means buyers and sellers exercise caution. Looking at the data for market activity during election campaigns, we can see that in the week leading up to a federal election, auction activity often dips. For example, during one recent election week, auction listings across the combined capital cities dropped significantly compared to the previous week, showing that sellers were hesitant to bring homes to auction on election weekend. The result, surprisingly, the auction clearance rate was slightly higher than usual. While fewer auctions take place on election day, those that do go ahead tend to attract committed buyers, often leading to strong results. Now, the pre-election listing caution we spoke about is usually very temporary. Domain's data shows that the number of property sales nationally remains broadly stable around election months. There might be a modest uptick in the month just before an election and no significant deviation in the election month itself. In other words, while a few sellers delay listing and some buyers hold off until the dust settles, many transactions still do go ahead. From a market sentiment perspective, political uncertainty has a measurable but mild dampening effect upon real estate activity. Now, Domain's research highlighted a correlation between the Economic Policy Uncertainty Index and home sales, showing that as uncertainty rises, consumer confidence falls and housing demand eases just slightly. Now, this doesn't crash the market by any means, but it shows how underlying sentiment can soften when political outlook is unclear. Buyers become a bit more hesitant to make major financial decisions, and some sellers wait for clearer skies, a pattern that reinforces the slight pre-election slowdown we see in listings. Remember, elections aren't just about who wins, but mainly about potential housing policy shifts. And this is why people become cautious. Just briefly, here's some of the most impactful policies that get shaken up at election time that affect sentiment. Negative gearing and capital gains tax reforms. For example, in 2019, investor demand dipped while reform proposals emerged. Once the election result was clear and the rules didn't change, confidence rebounded and prices once again surged. First, home buyer incentives, such as grants, stamp duty concessions, and schemes like Home Builder, boost demand by allowing easier market entry for first-time buyers. So they get votes there, but they can actually push prices higher if supply doesn't keep pace. So keep that in mind. Now, this boosts buying power for those who need it, which is a great thing, and it gets votes. But it's controversial because unaffordability remains unchanged if demand rises faster than supply can keep up, and that pushes prices higher. Supply and affordability programs. Shared equity or large-scale housing targets can help buyers get into the market, and this does boost the hope of those wanting to enter the market. And the theory could really help out some would-be buyers. But these schemes are difficult to manage, and as we have seen, can face big delays in making any meaningful impact. Remember, once election results are in, uncertainty fades and stalled transactions resume. The market typically stabilises very quickly, driven once again by underlying fundamentals. Nonetheless, if you're thinking of buying, keep a long-term focus. Base your decisions on fundamentals, not just political hype. Look for opportunities in the lull. Fewer bidders can mean better deals pre and during the election. Stay informed on policy, but don't overreact. Policies matter, but are often watered down after the fact. And after the election, plan for the next cycle. Hone in on and adjust to any new incentives or regulatory shifts, especially those fundamentals that may be impacted by any change in policy. As you can see, elections have only minor, short-lived impacts on housing. By turning down the noise and focusing on core market drivers, property investors can navigate elections with confidence. Until next time, happy property navigating.